Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it. And basically, we had started with the Banking Companies Act 1949. Okay? So we are discussing over the Banking Companies Act and basically we are discussing about various provisions enumerated in this particular act. Okay? This act was came into the existence on 16th March 1949. Okay, but here is a twist. Actually, it's my style to make sure that you are revising it. So now, what is the name of this act? If I'm ask you, so this act is now known as the Banking Regulation Act, or in short, BRA. Okay, 1949. So when it was changed from BCA to BRA, that year was 1st March 1966. That's what we had learned in the previous lectures. The act was passed as the Banking Companies Act 1949 on 16th of March 1949. Later, it got changed into the Banking Regulation Act 1949 on 1st March 1966. That's what we had covered so far. All right. In the previous lecture, we had started the discussion over the branch expansion, which means that suppose if this is the bank we have named as A. Okay. This bank is located at any city like city Rohtak. Just it's an example. All right. Okay. Like the city Rohtak. All right. But now the bank A wants to expand itself and basically they want to be in the city Delhi. Sorry, city New Delhi. Delhi is basically an union territory. Okay. In city Gwalior or any other part of the country. So basically, they have to expand their branches and that's come under the branch expansion. Okay. And basically, we have been discussing over what are the provisions, what are the facts and figures enumerated within the Banking Regulation Act 1949 regarding the provision of branch expansion. Like what are the steps, what are the rules and regulations a bank has to be followed in order to expand their branches. All right. About RBI approval, we had discussed. All right. About capital adequacy, we had discussed in detail. All right. Right now, we have to discuss over the maintenance of the CRR and the SLR. This is very, very important. All right. So basically, about CRR and SLR, I had told you many times. The first one is known as the cash reserve ratio. Okay. The second one is known as the statutory liquidity ratio, right? We all know the full form of these two particulars. Okay. And what are their rule? So these are basically monetary tools or monetary policy tools which are decided by which organization? The answer is Reserve Bank of India, right? The Reserve Bank of India is the authority which decided the CRR and the SLR. That's what we had discussed already. Okay. And the CRR and the SLR are basically the reserves a bank has to park with the RBI and has to park with itself. Okay. So now I'm just asking you the question. Which of the following reserves should be parked with the RBI? and which of the following reserve should be passed with the bank? Okay, you have 10 seconds to think about it, then I will give you the answer. And right now, I'm just telling you, I have told you so many times about it, so I expect the right answer from your side. Your time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. The time's up. So basically, the reserve which is to be parked with the Reserve Bank of India is known as the CRR. And the reserve which is parked to be with the bank itself is known as the SRR. Alright. So CRR is basically the reserve. The bank has to submit to the RBI, and the SLR they can keep with themselves. Alright. So this is what we have learned so far. Now, the question is, what is their role in terms of branch expansion? Like, why we are discussing about them? So the clear cut answer is that every new branch opened by bank in order of expanding, or you can say in order of expansion, is required to maintain a particular CRR and SLR reserves as prescribed by the Reserve Bank of India. Okay, so the every new branch opened by the bank in order to expanding or the expansion is required to maintain a particular CRR and the SLR reserve as prescribed by the Reserve Bank of India. Like the same what we have written down here. The banks are obligated to continue maintaining the CRR and the SLR as specified by the Reserve Bank of India. For example, let's suppose this is the bank known as XYZ. Okay, they had their branch in city A. All right. Thereafter, they opened their two new branches at city B and at city C. All right. So basically, XYZ has to ensure that the maintenance of CRR and the SLR is to be maintained on these new branches also. Like they were already maintaining it at city A, where they had their headquarters on the main branch. Similar pattern is to be followed on city B, on city C. They could not say if they had rupees 10 lakhs at city A. Okay. And basically you can say, just take an example. CRR is 4% and the SLR is 3% as prescribed by the Reserve Bank of India. Just for example. Okay. So in city A, if they had total reserve of 10 lakh and the 4% is the CRR, it means that 40,000 is to be kept as a CRR and 30,000 is to be kept as a SLR. All right. So 70,000 is a total amount minus from 10 lakhs, which means 9 lakh 30,000 is available for banking operations like making investments, like making loans and all the things. All right. Similar pattern is to be followed in other two branches as well. Like if city B having total reserves of 5 lakhs. All right. City C is having total reserves of 6 lakhs. Okay. So they are also required to maintain the CRR and the SLR. They could not say we are maintaining it on it at one branch. It means that we are not maintaining it at the second branch. All right. So if we go with this particulars, then it means the 4% of 5 lakh is rupees 5,000. All right. Is to be, sorry, it's rupees 20,000, not 5,000. It's rupees 20,000. All right. It should be the CRR at city B. Okay. Similar, if we go with the 30,000, it means 15,000 would be the SLR at city B. Okay. So if we merge this amount, it will become 35. It means that only 4,65,000 is available for the banking operations. Similar thing will be applicable on city C as well. So now I hope that you have got a clear-cut idea about the CRR and the SLR provisions under the bank expansion. All right. So if any bank who is planning to expand their branches, they are to be required to ensure that the CRR and the SLR should be maintained as per the prescribed manner. All right. Now, let's move forward. These ratios are essential for liquidity management and ensuring that the bank can meet depositors' demand. Okay. So, let me tell you one thing. The main question is why it is important that the banks had to or has to maintain CRR and the SLR at every branch. Why it is required? Why the banks could not say if we are maintaining it on our particular headquarter. Let's suppose if the bank have total deposit of rupees 100 lakhs or 1 crore you can say. Okay. And the bank had 5 branches. All right. Like the branch 1, BR1, BR2, BR3, BR4, BR5. All right. So it means that 20 lakhs, 20 lakhs, 20 lakhs, 20 lakhs, 20 lakhs. All right. So the banks had to maintain the CRR and the SLR at every branch. It means all these 20 lakhs at every branch is to be divided after CRR and the SLR. The bank could not say if we have 100 crores or 100 lakhs. So simply we will divide the CRR and the SLR at our main bench, and then these branches should be exempted from this ratio. Why I'm saying this? Because at every branch there are different customers or consumers you can say. Every branch having the different customers. All right. And every branch having a different net demand and time liability. Okay. So in case if the bank is already maintaining the CRR and the SLR at their headquarter and not at every branch. Suppose if branch 3, the customers arrive to withdraw their money and the bank is not maintaining the CRR and the SLR to meet the NDTL on that time, and basically they had granted their 20 lakhs as a loan to the people. So what will happen? This branch will be declared incapable to maintain the or to repay the loan. All right. That's why, sorry, to repay the borrower's amount. That's why it is very, very important that each and every branch of the bank is required to maintain the CRR and the SLR at their particular branch, not at the headquarters just only. All right. So I hope now you have got this. Okay. Let's move forward. Thereafter, the branch relocation. Now it is another important case. Okay. In some cases, banks may wish to relocate existing branches. The RBI evaluates such requests to ensure that the relocation is in the public interest and in compliance with the regulatory guidelines. So let's discuss it in depth. Okay. In the previous matters, we are discussing, suppose if the bank is wanted to expand their branches, it means branch 1, branch 2, branch 3. In this case, the total branch of the banks are 4 branches, including the headquarter, right? That's what we had discussed so far. Okay. But now we are discussing about the relocation, not about the expansion. Just make sure we are discussing about the relocation, not about the expansion. It means that the bank already had the 4 branches. They are not making it to the 5. But suppose in the next page, let me tell you. Suppose if the bank had branch 1, branch 2, branch 3. Okay. Now the banks basically had a 3 branch. The first branch is at city A, the second branch is at city B, and the third branch is at city C. Okay. But now the bank wants to change the branches from city A to city D, from city D to city B, and from city C to city F. This is known as the branch expansion. Previously, they had the 3 branches. Now they had the 3 branches. There is no difference in number of the branches, but their locations have been changed. In first, they were situated at A, B, C respectively. Now they are going to be shifted at D, E, F respectively. So this is known as the branch relocation, which means the bank is not establishing a new branch, but they are changing it. Okay. For this kind of situation, we generally had 2 provisions. First, when the branch is relocating within the same area or municipality. Okay, within the same area municipality, it means that the bank is not shifting it to any other area, but they are basically lies in the same municipality. For example, let me take an example. Suppose this is the municipality, okay, and this is the area. Okay, so the bank previously had their branch at this area, but now they want it to be at that area. Okay, so they are not crossing the municipality boundaries. Basically, they are changing their position from this one to this one within the municipality. In such a case, no prior permission of RBI is required, but the bank has to change their license address from regional office of RBI. Okay. So in such a cases, when the bank is not going beyond the boundaries of the municipality and they are basically shifting it within the same municipality, in such a cases, no prior permission of the Reserve Bank of India is required. You do not have to ask them before doing it. But yes, the bank do had to change their address or licensing address. Okay. From the regional office of the bank. Sorry, Reserve Bank of India. Second case is outside the municipality or area. Okay. Suppose if there are 2 municipalities, this is the first one, this is the next one. So the bank previously lies at here and now they want it to be here. Okay. So in this scenario, they are changing the municipality. In such a cases, prior permission of Reserve Bank of India is required, and bank has to change their licensing address from the regional office of Reserve Bank of India. Okay, so these are the two main cases that we have discussed. The first case is that when the bank was not crossing the boundaries, they are just shifting their position from one point to the another point. In such a case, no prior permission of the Reserve Bank of India is required. But yes, they have to change their licensing address from the regional office of Reserve Bank of India. In the second case, when they are shifting it from the one municipality to the another, or basically they are shifting it from one place to another completely, means they are crossing the boundaries. In such a cases, the prior permission of the Reserve Bank of India is required, and the bank has to change their licensing address from the regional office of the Reserve Bank of India. Okay, and this is the third case in the same scenario. Third case states that changing or shifting it to the semi-urban or rural area. Okay, it means that they are shifting it to some town or some village area. Okay, in such a case, similar provisions of first case is applicable. Okay, now you will ask me what was the first case? That one. It means that no prior permission of the Reserve Bank of India is required, but the bank has to change their license address from regional office of Reserve Bank of India. Similar case will happen there. The bank is not required to take the prior permission for the Reserve Bank of India, but yes, they have to change their licensing address. All right. Okay. The Reserve Bank of India evaluates such requests to ensure that the relocation is in the public interest and in complies with the regulatory guidelines. All right. There is one more point which is to be included. It's like, what is the criteria of shifting the branches? Okay, like how a bank could shift their branch from one point to another. So the first is that meeting all the requirements of new area, okay, where it has been shifted. It is the first criteria. The second one is easily, or you can say new location should be easily accessible for the customers. Okay. And the third point is informing the customers priorly is very important and must. Okay, so these are the three basic criteria. The first is meeting all the requirements of new area where it has been shifted. It means if the bank was lying at here, now they wanted to get there. Okay, so whatsoever of the criteria of this place and whatsoever the criteria of that place, if they are equal, it will be easy for the bank. But in case they are different, it means that this region which is called B and this region which is called A. So the criterias of B are different from criterias of A. In such a case, the bank has to ensure that they are fulfilling all the criterias of their new location. Then only they will get the permission to do it. Okay. Thereafter, new location should be accessible for the customer. It means that if the bank is shifting from A to B, all right, so the new location is to be accessible to the customers of A easily. All right, it doesn't mean that the bank found the customer at B are very lucrative, so they shifted it, and the B location is inaccessible for location for the customers of A location. In such a case, the RBI will cancel the permission or may ask the bank to ensure that the new location should be accessible for the customers of A as well as. Okay, and thereafter, the third case is informing the customer priorly is very important and must. Okay, it means that when the bank is shifting from A to B, the bank has to inform the customers at A priorly that we are shifting and that's what are the reason. And write down one additional point. The bank has to convince the Reserve Bank of India about shifting reason. All right, like why the bank had decided to shift it from A to B. All these reasons, what they do had what they have done the research. Okay, what are the findings of the research, what are the reasons for the shifting, all of these things are to be presented before the Reserve Bank of India, and the bank members have to convince the Reserve Bank of India so that the permission could be granted. Okay, it is very important point. Okay, thereafter, the foreign branches. Indian banks planning to open branches in foreign countries required approval from the Reserve Bank of India. These banks must also comply with the regulatory requirements of the host country where the foreign branches is to be established. All right. For example, suppose if this is the bank known as XYZ, and right now they are operating in India. Okay, but now they wanted to shifting their bank to any place, like they want to shift it to the America, okay, Australia, all right, Europe. They wanted to shift it. Okay, in such a cases, the XYZ has to ensure that they have got the permission from the Reserve Bank of India. Okay, like they are allowed to open it to the America, Australia, and Europe. And similarly, XYZ is required to comply with the requirements of countries or the banking requirements of countries like America, Australia, and Europe. If the criteria is matched and the Reserve Bank of India is satisfied, then the permission could be granted. All right. So remember this point also. Thereafter, the branch expansion in the rural and the semi-urban areas to promote financial inclusion and ensure that banking services are accessible to undeserved populations. The banks are encouraged to expand their branch networks in rural areas and semi-urban areas. This aligns with the RBI's financial inclusion initiatives. So let me tell you one thing, and let me ask you one thing, not telling. I have told you so many things. Now I want to ask you. I had told you the bank is more greedy than any other organization because they are wanting to earn the more and more profit by granting more and more loans. This is their plan. All right. So tell me, if we are talking about the investment and the loan perspective, I have write down the two locations here. What do you think? Which location having a much more potential of taking loans and making the investment in comparison of both? So if you think about it rationally, you will say urban. Okay, urban population. It is a winner, and basically rural areas are the runner-ups. Okay, because they do not require a much money, they will not ask for the loans and other investments, or even if they are taking the loans, the loan amount will be lower in comparison with the urban areas. All right. So as a bank, I will always prefer for the urban areas. All right. And that's what the banks do not, that's what the government and the Reserve Bank of India do not want. Okay. Because if the banks will only focus on the developed areas, then what will happen to the rural areas? Okay. That's why the banks are also encouraged to open their branches at the rural areas as well. Now, the question is how it could be possible. So basically, many, you can see the privileges and many things are offered to the banks for this kind of conditions. For example, if we talk about the Reserve Bank of India, what are the things offered by the Reserve Bank of India? So the first is the Reserve Bank of India support them with priority sector lending, like they got the relaxation and various other provisions regarding this thing. Okay. Thereafter, concessional financing. What do you mean by it? It means that whatever the cost will occur in construction. It means suppose if I have the bank XYZ and I want to open it in three villages. So I have to purchase the land, I have to construct the building, I have to deal with so many people like the carpenter, like the constructor, like the electricians. So I will have to pay some amount for this. Okay. So if I'm opening the branches in that area, so the Reserve Bank of India will give me the concession. It means they will pay half of the money or some amount of the money on behalf of mine. Okay. So concession financing is offered by the Reserve Bank of India. Thereafter, relaxed regulations. Okay. Like if the RBI is making rules and regulations for everyone. Okay. But I am having a branches at the rural areas and the suburban areas under the developmental missions. So I will get some relaxation in that kind of rules and regulations. Okay. Similarly, if we talk about GOI, it's a government of India. Then basically the first is tax benefits. Various tax benefits are granted to the banks. Second is the government will provide them the marketing support so that they could expand their business. And the third point is government will also ensure the infrastructure support. It means that if they are purchasing the electricity, they are purchasing the water supply, they are purchasing some other raw materials, so they will get the subsidies and the discount over it. So this kind of encouragements are provided to the banks by the Reserve Bank of India and the Government of India respectively. All right. Now I hope you have got the point. Let's move forward. Off-site ATMs. Banks are encouraged to establish off-site automated teller machines to enhance the accessibility of the banking services to a wider customer base. Off-site stadiums can be strategically located in areas where a full-fledged branch might not be possible. Like if you are the one and you have to withdraw the money from a bank account, so you have to visit the bank. Okay, and basically there are three ways. The first way, sorry, there are two ways. The first way is going to the bank and withdraw the money. The second way is go to the ATM and withdraw the money. So obviously the people generally prefer to go to the ATM. Okay, and the ATMs are basically of the two nature, on-site and the off-site. On-site ATMs are the ATMs presented in the banking campus. Okay. Offsite ATMs are the ATMs presented outside the banking campus. Okay. So generally, the banks are advised to open the offsite ATMs. So the peoples who are living far from the campus and are not willing to come to the campus could use the offsite ATMs so that they could draw the money. All right. Thereafter, restrictions on the rapid expansion. Actually, the banks, if the banks are rapidly expanded, it means that they are spending their money, they are dividing their capital, okay, and they are reaching the new and new customers. So it might be risky if it is doing in the rapidly phase. So that's why the Reserve Bank of India ensures that if any bank expanding itself, so the expansion should be gradually. It means slowly, not in a rapid mode, because it could potentially weaken their financial stability. Why? I have told you. Okay. The RBI may intervene if it perceives excessive inspection that may jeopardize a bank's stability. So, if the Reserve Bank of India finds out that a particular bank is spending a lot or very fast, then the Reserve Bank of India may intervene and stop the expansion. Foreign bank branches. Foreign banks operating in India must comply with the regulatory restrictions and conditions related to numbers and location of the branches. Foreign banks are treated well in India, but they are also controlled under the BRA sections. All right. This ensures that the foreign banks operate within the regulatory framework while providing services in India. Okay. Monitoring and compiles. The authority lies with the Reserve Bank of India. So it actively monitors banks' branch expansion activities, ensures their compliance with the Banking Regulation Act and other relevant regulatory guidelines. The goal is to maintain a well-regulated banking sector. Okay. So students, basically in this lecture, we have finished with the branch expansion provisions. In the next lecture, we will start with control over the management provisions under the BRA. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.